Good afternoon. This is Clark Neighbors with the market commentary for BIS Commodities in Cedar Rapids, Iowa on the week ending August 2nd, 2013. Three highlights in the grain markets this week. Number one, obviously, is the weather. Two, cash markets, which are still a huge story, but not on the front page of the newspaper any longer, maybe on page three. And then technically, tough week, seasonal break in these markets. To give kind of an update of the week, September corn is down 16 cents for the week. December corn down 13 cents in the week, both making new contract lows. November soybeans, new crop soybeans down 47 cents for the week. Today reaching the lowest level since last summer prior to the drought. And December wheat actually up 9 cents. Wheat market, both from a world perspective and a big picture supply and demand scenario, seems to have the most support short term. This morning, the Fed came out with job report numbers. 162,000 new jobs, a little lighter than what the trade was looking for. Unemployment number dropped from 7.6% to 7.4%, namely because of less workers looking for work. It seemed to have a little pressure on the dollar this morning, but the stock market continues to look very solid. The other report coming up is, as far as the ags are concerned, August 12th, supply and demand update by the USDA, and that will also be the first production update by the USDA. A couple quick notes on that. The August report is always the first report where we get an actual yield survey type count on production. Be interesting to see how they do that with the immature crop at this point. And also they will do a resurvey on soybean acres for this August report. So those are two things to watch as we approach that report. Keep in mind, between now and then, a week from Monday, many private analysts will be coming out with ideas or thoughts as far as yield and production, so that will be a talking point next week on a day-to-day basis. As mentioned earlier, November beans took out the April lows earlier today, thus hitting stops. We went from trading just a few hundred contracts every 10 minutes to almost 12,000 when that happened. Lowest level on beans since last summer. The other thing to note on soybeans is from a price relationship versus corn versus wheat, beans look a little overvalued from a ratio standpoint. Now, some people may say that's not a big deal because the crop's planted. Very good point, but keep in mind the next 60 to 90 days, the southern hemisphere will begin preparation for planting, and some are anticipating Brazil could, due to this increase in acreage and so on, could actually by itself surpass the U.S. in bean production next year for the first time ever. So from a world perspective, keep in mind that's right around the corner. As far as December corn is concerned, those customers that get our market newsletter we do on somewhat of a regular basis, there's a chart there this morning that went out with this newsletter looking at December corn futures in a long-term perspective on a monthly chart, going back many years, but mainly focusing on the rally or the bullish market we've been in since 2006. Also comparing the prices versus stocks to use on corn during that same time frame. And just a reminder, stocks to use is the ending stocks as a percentage of total usage for the particular year. And interestingly enough, if you look at the chart and you go back and look at 2006, 2007, 2008, 2009, 2010, during that time frame, other than a huge jump during 2008 because of a commodity buying binge all the way around the world based on a cheaper dollar and so on, you take that out of the equation, during that 4-year time frame, the stocks to use ratio on corn was roughly 12 to 14%. In 2010 through 2012, the stocks to use ratio due to the tightness was well under 10%, thus very tight stocks. Thus, since 2010 until this last month, December corn futures of any kind have not been below $5. But getting back to those stocks to use in 2007 through 2010, when stocks to use were 13-14%, keep in mind this upcoming year right now, the USDA is anticipating our stocks to use to be a little heavier than that, somewhere around 15-16%. During that time frame in those years, corn traded mainly between like $3 and $4.50. So I think that's a key thing to keep in mind. We have many in the industry that think there's not any more downside in this corn market, and maybe there's not. But historically looking over the last few years, according to stocks to use ratio, that's kind of an interesting dynamic to look. If you have any questions on that, feel free to call us here in the office. Weather has been a key ingredient to the downside of this market over the last few weeks, being labeled non-threatening. The heat, the dryness story is behind us. Additional rains would be beneficial to the crop, and right now the anticipation by the trader is the crop continues to grow. The question is how much. Obviously the lateness of the crop, concern potentially of a early ending frost or cold weather is still in the cards. That seems to be the last hurdle to some degree from a weather standpoint left in this market. The other big story, and this has been going on for the last year, if not longer, but more specifically the last year because of the tightness in both corn and bean stocks, is the huge inversions we've seen in the market and the historically large basis or cash markets we have seen. Now, in the past couple of weeks, especially the week prior, the spreads, the basis collapsed rather dramatically at a historical pace. Now, this week, as a general rule, we've seen some strengthening again of basis, some strengthening of spreads up through today as the SEPD's corn spread today struggled and went to the lowest level or the least amount of inversion we've seen since April. Now keep in mind that old crop, new crop spread at some point has to come totally together. We still have, from a historical standpoint, at or near record basis levels in many locations, even though that basis has come off. But walking a tight line here with this old crop scenario, with the new crop coming aboard here shortly. There's still going to be some tight windows, some tight spots, but be careful with this situation this late in the crop year. The other thing we've noticed on phone calls of recent is producers looking at crop insurance as their loan protection mechanism for prices. And to some degree that is correct, but as soon as harvest is basically done, that protection mechanism is gone. So I think producers need to be a little more defensive. Remember what crop insurance is for. It's for insuring things and not using crop insurance as a price protection mechanism, using insurance as revenue protection mechanism, because you still have to protect the crop price. Again, weather, cash markets, and a huge technical swing and seasonal break in this market has been in the cards. Also keep in mind from a seasonal standpoint, over the last 4 years during these tightness that we've seen in the summer months, we actually have seen, and obviously a year ago being the absolute exception, rallies in the summertime. That's not taking place, so this is more of a seasonal type of market. Just briefly in the cattle market this week, looks like steady to lower in the cash in the south, Texas and Kansas. In that 119 area, that could bring on some deliveries against the August futures, which are at a premium. Charts, the cattle market broke out of some recent trends, or a consolidating type market, so that could be a little negative also on the chart, so be careful with that. Seems like the cattle market should have some upside potential, but use that upside as ways of eliminating some of the risk. So as a whole, weather, cash markets, seasonal or technical break are going to be key factors we've watched over the last 2 weeks and probably the next several. August 12th crop report a week from Monday could be the next game changer in this market. If you have any questions, feel free to call us at the office here in Cedar Rapids, 1-800-373-2525 or BIScommodities.com. With that, have a fabulous weekend.